Thanks for watching this Magellan update. Today I'm speaking with Chris Wheldon, Portfolio Manager at Magellan. So Chris, we're hearing more and more about artificial intelligence. Maybe you could give us a bit of an insight into some of the leading companies as well as some of the emerging companies in that field.
Yeah, that's right. We are hearing more and more about it every day, but not only that, we're touching it and experiencing it more in our daily lives every single day. It might be something like Netflix serving us video recommendations and Amazon serving book recommendations. We use Google Maps now to navigate from point to point, and it figures out the fastest way through the traffic. These are all examples of artificial narrow intelligence, and it's worth just separating artificial narrow intelligence from artificial general intelligence. AGI is, in sort of layman's terms, the superhuman intelligence that the industry seems to be working towards, and some experts are quite concerned about AGI. But artificial narrow intelligence is what we're all experiencing ourselves these days. And it's quite limited to certain industries and use cases and things like the Netflix and Amazon examples that I just provided. You think through artificial intelligence, what really is required to make it all work is huge amounts of data, high quality, high fidelity data. Artificial intelligence services like machine learning and natural language processing, computer vision, for those things to work, they need an enormous amount of data. And that's why we like companies like Alphabet. You know, talking about companies that are leading in this field, Alphabet's certainly one of them. And the reason for that, you think about all the data that Alphabet collects from us as users of its services. Alphabet has 9 different services, 9 different apps or services with over 1 billion monthly users. So that can be things like Maps or Gmail or Google Calendar, Google Search, all with over 1 billion monthly users. And then every single day that goes by, in the Google search box, there are over 6 billion search queries every single day. So an enormous amount of data coming into Google, which allows them to refine and improve their AI services. You combine all that data with Alphabet's $20 billion annual R&D budget, and the fact that of about the top 100 AI engineers and academics around the world, it's estimated about half of them work at Alphabet. They bring a lot to the table here in terms of their AI capabilities. And you see that in their businesses, like we spoke about Google Maps, but they're creating new businesses as well. Things like Waymo, their autonomous vehicle driving unit, that service, that capability is a huge data and artificial intelligence challenge. You think about what they're trying to do, it's all about creating the world's most capable and safe driver. That's what they're trying to do, and that is a huge AI challenge. And what Alphabet has been able to do so far is in the real world, they send these cars out, you know, the Waymo cars with the radar on top and the lasers on top. We've probably all seen the pictures of that. In the real world, those cars have already done about 10 million real-world miles on real world, roads around the world. But more impressive than that, more impressive than the 10 million miles actually driven, is 10 billion simulated miles. So in the virtual world, every single day, they're logging more and more of these miles in the virtual world, and that's allowing them, again, to refine and improve those AI systems to develop this autonomous vehicle capability, which is really exciting and a key part of Alphabet's future.
And so, Chris, when do you think we'll see these autonomous vehicles, and what are some of the implications potentially?
Yeah, we spoke about Waymo. I mean, they are already driving these cars around in the real world. So it's not mainstream yet, but they are on that journey. If you flew to Phoenix today and you dropped off the airplane and you drove into the center of Phoenix in Arizona in the United States, there are Waymo cars driving around autonomously in that city today. You know, it exists, it's happening. This is not just a concept anymore, this is real world experience. But there is a range of opinions. When will this become mainstream, which was the question? That is hard to know. I mean, there are use cases already in certain markets around the world, but there's a lot of debate in terms of how safe these things need to be, regulatory approval for them around the world. So there is a lot of water left to go under this bridge, but it is happening. We are moving in this direction. And then that forces you to think through the implications, like you asked about. And there are quite obvious first order implications. You think about autonomous vehicles, and at an individual level or a household level, there's just less requirement for us all to have cars or to own our own cars. So that's quite an obvious first order implication, but the second order implications are much more interesting and in fact harder to think through what the consequences could be. You think about the auto insurance industry, for example. I mean, if we have these autonomous vehicles driving on roads, they are mainstream, they are safer, why do we need to have auto insurance, for example? So what happens to that industry over time? You think about the huge amount of land around the world in our homes and garages or in public spaces with public car parking that we require at the moment because we all own our cars individually. If we no longer have that ownership model and instead there's these fleets of autonomous vehicles constantly moving around and not parking anywhere, how are we going to repurpose that land, be it in our homes or in these public car parks? All this land's going to get freed up in cities and in homes around the world. So thinking through that, there are other second order implications. You know, if we are in these cars as users of these services and we're not in control and not driving them, what will we do with that time? You know, will we spend more time on Facebook, for example? Or, you know, how will we spend that time? There's going to be a lot of time, commuting time in our day freed up that we will fill somehow. We don't know the answer to those things yet, but they're really interesting second order, both opportunities and threats to certain industries as well.
And so, Chris, we've recently disclosed that Alibaba is in the portfolio in a meaningful position. Maybe talk us through why we like Alibaba?
It's a broad question, but there is a lot to like about Alibaba. I think the two easiest ways to answer that question is first to talk about what in the industry and the market appeals to us, and what is it about Alibaba specifically that appeals to us. And if you start on the market side, you just have to recognize that in China today there is an enormous market opportunity. You know, we're speaking about a market of 1.4 billion people, with 20% of humanity in one country. And so that in itself, it's an enormous market. But then you start drilling down into some of the growth opportunities, things like the middle class in China, which is already 300 million people and expected to double over the next sort of 5 to 10 years. That's another 300 million people joining the middle class. That's the entire US population today. You know, these are enormous numbers that can come into the consumer class, the consumption class in China going forward. You still have urbanization trends in China today. There's still another 30 million people in China each year that move from rural centers to urban centers in China. And with that comes job creation and spending power. In China today, there are already over 150 cities with more than 1 million people in them. You know, we know in New Zealand today there's one city, Auckland, that has over 1 million people. China already has 150 of those cities. So it's an enormous market with enormous growth tailwinds behind it. That's a very attractive market to begin with. And then what is it about Ali specifically that we find so appealing? Well, it's a very high quality business, which is always where we start at Magellan. And the core of Alibaba today is its e-commerce marketplace business. That business has about 70% market share of all e-commerce in China. So it's incredibly dominant. And some of the numbers are quite breathtaking. You know, this business is 20 years old, but it already has over 700 million users on those e-commerce platforms. That's half the China population today. It's already 10% of humanity. If you look at the value of the transactions that take place every year, that took place last year on Alibaba's e-commerce marketplace, was about $850 billion US just on Alibaba, which is larger than the entire US e-commerce industry taking place just on Alibaba's platforms today. They grew users by 20 million in just the last quarter, just the last 3 months. New Zealand's got about 5 million people in it. Alibaba grew by 4 times that in just the last quarter. So there's enormous growth going on here in just the core parts of Alibaba today, that e-commerce marketplace business with just under 70% market share. It's still growing its revenues in the sort of 20 to 30% range. It earns margins of nearly 70%, so it's incredibly dominant, high quality, very profitable. But then there's all these other parts of Alibaba as well, which are really interesting going forward. It has the largest cloud computing business in China, 3 times the size of its next largest rival. You think about the growth tailwinds behind cloud computing in China going forward. Alibaba also has a big shareholding in the largest digital finance company and payments company in China. Again, thinking about the tailwind that will provide going forward. One of the largest logistics companies and food delivery companies and digital video companies in China. It is a gem of a business, leading positions across all these different parts that it operates. Long-term enduring tailwinds, the growth of the middle class, urbanisation, e-commerce, digital advertising, all these things providing good visibility into the growth prospects for Alibaba going forward. And we think it's cheap. We think it's meaningfully undervalued at the moment, which is quite interesting because if you look at where it's trading on a forward price earnings multiple at the moment, its forward PE is about 31 times, which many people would look at and go, that's quite expensive. It's almost double where markets are, where the S&P or the MSCI global market is at the moment. It's about double the multiple, so it looks quite expensive. But if you dig into the valuation and you sort of strip back the different layers and those nascent loss-making businesses, if you kind of think about how they should be treated and valued separately, and just drill down to what that core e-commerce marketplace business is, that incredibly dominant, high growth, high margin business, you do that work, we think that's valued in markets today at about 18 times forward earnings, which is about where the S&P 500 is trading. So you've got what we think is one of the highest quality businesses on the planet, valued at about where the market is valued overall, but of course it's growing 20 to 30% per year. It's got these enormous margins. It's very, very dominant in its industries and has all these nascent but very likely high-performing, high-growth businesses attached to it, like the cloud business and the digital payments business going forward. So there's a lot to like from Ali, both at the market level, at the company level, and also from a valuation point of view, which is why, as you pointed out, it's become a meaningful position for us.
So Chris, let's talk about smartphones. Obviously Apple and Samsung are the dominant players in that market, but presumably there are secondary players that are involved in apps, software, other phone makers.
Yeah.
What do you see as the future trends in this space?
Yeah, it's such a good question, and you're right at where you started the question. We really like parts of this industry, not all of it, but certain parts of it, particularly at the operating system level. And you mentioned Apple, and the other key player at the operating system level is Android, owned by Alphabet. And that's effectively a global duopoly. Most premium smartphones around the world either run on Apple's iOS operating system or Google's Android operating system. So it is a very, very powerful duopoly in that global smartphone industry at the moment at the operating system level. That's important because if you look across the rest of the industry, at the components and all the other parts that you spoke about, to be honest, the first issue we run into there is many of them are too small for us at Magellan, and that's always been the case. The second issue, which is just as important, is they're not of sufficient quality for us at Magellan. And part of the reason they're not of sufficient quality is because they're often suppliers into Apple or to Google. And when you have that duopoly to begin with, you don't have much bargaining power when you're trying to deal with these two big dominant players in the industry. But that's not to say that there are certain businesses that benefit and have benefited enormously from the growth in smartphones around the world and the different components of smartphones and the software on them. If you think through our investments in Facebook and their suite of apps like Facebook and Instagram and WhatsApp, you think about our investment in Alphabet and Google and Gmail and Maps, even our new investment in Alibaba and its suite of apps, they're all benefiting from the growth in premium smartphones around the world. We use these apps more and more every single day because we're engaging with our smartphones more and more every single day. So those software players have been enormous winners in the growth in premium smartphones around the world. And then there is, going forward as well, you think about a business like Apple, which has really benefited from the growth in the hardware sales of smartphones over the last couple of decades. What you've seen at Apple specifically is quite a meaningful pivot, not to the exclusion of their hardware business. They still sell a lot of iPhones every year, but they've recognised now that is quite a mature industry. And around the world, many of the people that wanted and could afford a premium smartphone now have one. And so what we've seen at Apple is them pivot into services. And they're taking those very loyal users of iPhones and they're starting to sell services like Apple Pay and Apple Music and Apple TV and things like the App Store. They are the growing parts and very high growth parts of Apple today. The core hardware business, the iPhone business, is still growing, but it has become a much more mature business overall for Apple today. But there is enormous growth going forward in the services part of Apple. So you really need to look across the whole smartphone ecosystem and recognize there are parts that are still very good, but are slow growing, things like the Apple iPhone business. And then there are these very good but high growth businesses still, like some of the apps on these smartphones, as well as some of the businesses within Apple, the services parts of Apple, which are showing very, very high levels of growth and should continue to going forward as well.
Chris, do you have a view on the greater growth potential? Is it in hardware or software?
That's a tough question. I'm not sure at a hardware versus software level how to really answer that, but I think you need to go into the weeds a little on each of those different pieces. Because if you look at hardware, I mean, there are parts of consumer hardware that have become very mature and quite slow growth. We spoke about iPhone sales and other smartphone sales. The global personal computer market around the world is very mature. So you're not seeing much growth in certain parts of consumer hardware, like PC sales and smartphone sales. But if you look at other parts of consumer hardware, like wearables, I mean, the AirPod sales have performed incredibly well for Apple. Digital watch sales around the world are growing incredibly strongly. So there are different parts of the consumer hardware sector. Some are quite mature and slow growth, and some are growing very rapidly at the moment. If you look at industrial hardware, it's the same sort of thing. There are certain parts of industrial hardware that are growing incredibly rapidly. There are sensors being put on buildings around the world and manufacturing facilities around the world to keep an eye on how production facilities are performing and whether parts are wearing down and breaking down and things like that. So there is enormous growth in sensors, that industrial hardware around the world. So you need to get into the weeds a little bit on the different parts of hardware. Software seems to be growing quite rapidly wherever you look at the moment. And to be honest, at Magellan, that's where we've been most interested over time, is software businesses, because you tend to get higher quality businesses within software compared to hardware, because you have these platforms and these network effects and these switching costs in the software space, that you tend not to see in the hardware space. So if you look at our investments in things like Microsoft, it has a series of platforms. You know, the Windows operating system, a very powerful platform for a long, long time. There are new platforms like Azure in cloud computing. There are Office applications, you know, Word and Excel and PowerPoint and all those sort of things. Of course, Apple's iPhone operating system and Google's Android operating system, they are very, very dominant businesses that continue to grow very rapidly around the world. So software we would find more appealing because there tends to be a bit more growth there and they tend to be higher quality businesses. But there are certain parts of consumer hardware and industrial hardware as well that are also quite appealing, but we just have to be very select about the quality of the businesses that we may want to get some exposure to for clients in the hardware space.
And so, Chris, what would your next pick be for the next Amazon?
The next Amazon? That's a tough question because they've had tremendous success. Maybe a place to start would be Alibaba. That has core similarities to Amazon today. You look at the businesses in the industries they're in, they each have the respective leading e-commerce business in China and then outside of China. Amazon's very dominant in e-commerce around the world. Alibaba very dominant in e-commerce in China. They both have the leading cloud computing businesses inside of China or outside of China. They're both in digital entertainment and all these other nascent businesses. So I think there is an analogy there, but there's other parts of Alibaba that don't look quite the same. I'd argue probably Alibaba is even a little higher quality than Amazon, though Amazon is a great business. Maybe another way of thinking through that answer is potentially, which might sound a little odd, but Amazon is potentially the next Amazon. And the reason I mention that is they have had a demonstrated ability to reinvent themselves and create new businesses within Amazon over time. You know, you think for a long, long time this was just a core first-party marketplace business where effectively they were buying inventory and reselling it on their website, and then they morphed into a third-party marketplace where they would allow other merchants to sell on their website Alibaba never took control of that inventory. They just served as a marketplace for buyers and sellers. Then they built out a logistics business on the side of that. Then they built out an enormous cloud computing business. And now they're into personal assistance and consumer hardware and more industries around the world. So they've got quite a demonstrated ability to engage in meaningful experimentation and innovation. I think that comes right from Jeff Bezos all the way down. It's a cultural thing within the organisation. And I suspect 10, 15 years from now, Amazon will look quite different from how it looks today. So it might sound a bit of an odd response to the question, but perhaps Amazon is in a way the next Amazon.
Thanks, Chris.
Thanks, Frank.
And thank you for watching this update. As always, feel free to forward this link on to clients or colleagues where you think it may be of interest. Thanks.